In today's episode, we are going to be talking about Ethereum, decentralized finance, and BTC. Now, everything across the whole entire cryptocurrency markets is obviously down by about 60 to about 80%. I'm sure to all the new people out there, I'm sure you guys are probably freaking out, but to us, the OGs who have been around since 2015, right? And big shout out to the super OGs who have been around since 2012 or even 2011. You guys are freaking awesome. So to all the new guys out there, you are probably panicking right now. I understand how nerve-wracking everything might be, but I'm just here to reassure you that everything is just going to be back up. We are just experiencing another market correction, which is a phase in order for us to sort of make the market cycles. This is how basically the game goes. You go up, you come back down. But the thing is, the most important thing that you're supposed to be doing right now is you are supposed to be strategizing. You are supposed to be finding your next plays. What are you going to do? So I might give you a heads up. Obviously, the next bull run is obviously going to be propelled or rather pushed by decentralized finance. So right now you are supposed to be digging into decentralized finance cryptocurrencies and just basically reshuffle your portfolio. I mean, you can still have the OG cryptocurrencies, the top 10 cryptocurrencies. That's perfectly fine, right? But if you really want to end up making a lot of money, right, in a short period of time with very little amount of capital, you better look into decentralized finance, because this particular niche, as far as cryptocurrency is concerned, is just beginning to take off. Of course, there's going to be a lot of scams out there. There has been a lot of scams. I have actually invested in about two decentralized finance scams already, so I know what I'm talking about. I'm talking from experience. However, if you really shuffle and pretty much separate the dirt from the gold, you can obviously pick up a few gems and you might end up doing tremendously well. So I'm obviously not going to be here promoting some decentralized finance coins that I really think are going to end up doing very well, right? Because that usually doesn't end up going well for me. If you invest in something that I recommend and you end up losing your money, right, you are going to be looking at me like this super bad hearted type of person. So I don't want to be doing that. So I'm just going to be showing you a few of the decentralized finance coins that I'm going to be investing in. However, getting back to today's topic, obviously, there has been a lot of hype with regards to Ethereum and decentralized finance, and could this be the reason why we are having this nasty correction? Because across the board, I mean, right now, let me just try to refresh CoinGecko. Right now, the current price of BTC is around 10,179. A few days ago, we were trading at around 12,400. So we have obviously dropped down by more than 15%, like in the last 1 to 2 weeks, which is very, very good to the people who are going to be buying. I mean, the price of Ethereum is back to about 346, plus Chainlink is back to about $11 right now. It's actually trading at $12, which is very, very good. And Polkadot is actually down back to about $4. So what I'm trying to say is we are having like more and more opportunities to just jump onto the train for all the people that really ended up missing. So this is like another perfect opportunity, and we obviously experienced like some mass hysteria with regards to Ethereum, because if you guys were flipping a lot of decentralized finance coins on Uniswap, right, obviously the gas fees of Ethereum were absolutely ridiculous. I remember paying 150 gas fees because everything was like super expensive. This is one of the reasons why sometimes I really wonder, are we ready as a cryptocurrency community to sort of have mass adoption? Because if you take a look at Ethereum and Ethereum is like one of the best top performing cryptocurrency out there, but when it comes to scaling, right, we are still far from the traditional markets, from the traditional companies such as Visa, MasterCard, and all that stuff, because there isn't just that very environmentally conducive type of atmosphere, especially when there's a lot of congestion, if you know what I mean. So every time we have like some massive congestion as far as clogging the blockchain, right? Obviously, a lot of these cryptocurrencies tend to be expensive. Ethereum just has reduced ridiculous, crazy transaction fees. The gas prices are pretty ridiculous because everybody's just trying to have their transactions processed, and by the end of it, or it just becomes absolutely toxic, you know. And of course, if cryptocurrencies were mainstream and we were sort of calculating our expenditure in terms of cryptocurrencies, right, we wouldn't obviously feel the pinch. But right now we have this dollar cryptocurrency type of mentality where we are referring to the dollar. So whenever we have such a large congestion in terms of getting to process transactions, obviously if you really want to like end up being successful, especially when you are dealing with a lot of decentralized exchanges, right, you're obviously going to be competing with a lot of people who are not really caring about the transaction fees. So they might be able to like put up or rather bet a higher GUI, which is going to end up, you know, suffocating other people because they can't really absolutely compete with some people who don't really care how much GUI or how much gas fees are going to be, you know, charged in terms of them getting to process that transaction. And that really becomes very toxic to people like me who are very you know, I'm basically calculating every little penny that I have, and I don't want to like spend 150 just for me to like buy a certain cryptocurrency or just for me to process a transaction. So in general, I think we are still very far from mass adoption because every time we have like some sort of influx of transactions, right, all the times the system just becomes congested and it's absolutely toxic and very expensive. I'm sure nobody would be willing to process transactions worth $150. So right now, let me just take you back to the Wall Street cheat sheet, right? Let's take a look at BTC, right? Obviously, this whole hype, this whole amazing phase was obviously brought by decentralized finance. A lot of coins ended up doing very well. Like, for example, Compound is one good example. Synthetics. Oh, this one is up. Oh, okay. I mean, everything is trying to recover right now. So Synthetics Network. There's the Uniswap token. I think Uniswap is has got a token as well as I don't know, like an exchange. So Balancer also has one. I mean, there's like a lot of decentralized finance coins out there, and Curve is obviously one of them. And there's quite a lot of these amazing ones. So if you really want to like find a very good source, you just simply click on DeFi, and then from this particular list you can just pretty much shuffle and figure out which one is going to be better or best for you according to your own due diligence. So there's like a lot of opportunities out there. So if you just take a look at this particular list, there's quite a lot of opportunities if you just end up finding the right one. So just be patient, do your own due diligence. But I'm telling you, if you really want to make a lot of money in the next bull market, you better look into decentralized finance coins. So now let's get over to the psychology of the markets, the Wall Street cheat sheet, right? Obviously right now, I don't know, can I have like a bigger version of this particular image? It's not really that big. I don't know whether you guys can actually see this. Okay, so I'll probably try to zoom in or something. Yeah, that works. Okay, I think that's bigger for you, right? Okay, so take a look at this. So right now we are obviously here. The disbelief or a sucker's rally. So the little correction that we're going to encounter is most likely going to end up either finding support right over here on the peak of the anger phase, or we might end up, I don't know, going to the bottom of the anger phase, which is highly unlikely. So if we take a look at Bitcoin, right? Let's take a look at the weekly. So this was the depression phase, right? Is it? Or was it this particular area right over here? I mean, let's take a look at that as well. So I really think the most recent one was the depression phase. That was the March coronavirus, which is right over here. And this one should have been the anger phase right over here. So this is obviously the anger phase, this one. So anger, depression. So according to the Wall Street cheat sheet, right, we are most likely going to end up correcting towards the low of the anger phase. So according to this one, if the price of BTC is going to end up correcting and just dropping down, right? We might end up going as low as this particular level right over here. If I can just adjust that, yeah, around 6,000 something, 6,500 up to about, I don't know, 5,000, the late 5,000. So if according to this particular Wall Street cheat sheet, that is highly likely. So if you take a look at that particular dump, right, that is obviously going to be like the final shake off. All right, so obviously right now we are having the Nasdaq and the S&P 500 not really looking that very good, right? So if we end up correcting together with the traditional markets, then that's obviously going to be very chaotic for BTC, and we have like a little bit of a downturn. However, I really think that dropping all the way to about 6,500 is far-fetched, and I think it's highly unlikely. However, this is cryptocurrency. I mean, if we take a look at this particular downturn that we experienced, right? We had this massive drop where the price of BTC dropped all the way from about 7,898 all the way down to about 4,630. That happened in like literally a few hours. So if this downturn is going to continue, I mean, 6,500 is not really that impossible, but hey, you might never know. So my strategy right now is I'm really in stable coins because I really want to preserve my bullets, and I just want to be able to like buy back when there is massive blood on the street, because you know I really remember the anger and the frustration that I had during this particular phase because all my money was stuck in a lot of cryptocurrency projects, and I was wondering like, hey, if I had like loose change right now, if I had some free money, I would have obviously bought a lot of these cryptocurrencies very cheap. So right now I'm just taking the high road. Yes, the price of BTC might end up pumping back towards the 10,800 level, and I'm absolutely fine with that. If we just end up continuing our bull market rally, then I'm just going to be able to buy back. So right now I'm just taking the safest route possible, you know. So I'm just in stable coin, and I'm just going to give it a week and see what's going to happen, because I do not really want to trade the smaller time frames. I do not really want to trade the 4 hourly and the daily, because the 4 hourly right now is showing a little bit of signs of recovery. However, the smaller time frames are extremely unpredictable because they might give you false signals. So that's why I'm probably going to just lay low and just wait for this particular 2 weeks to sort of pass by. I'm just going to be in stable coins and just wait in case the price of BTC is going to end up correcting. I'm just going to be able to like buy this particular low, and I am having a particular price target of about 6,500. So of course it might never happen, but if it doesn't happen, I'm not really going to lose anything in comparison to me just biting the bullet and just going all in right now. Because you have to take a look at the bigger risk. The bigger risk for me right now is actually getting back into a lot of different projects, and then the cryptocurrency markets just end up correcting a whole lot. So to me, that is a bigger risk. However, if the price of BTC and a lot of these cryptocurrencies just end up bouncing back and rallying, I can always buy back, and I'm going to be I'm still going to be able to like make more money on top of the stable coins that I have. So to me, obviously being in a stable coin right now is a smarter move to make in comparison to you just holding on to your cryptocurrencies, because by the end of it all, you can actually get to like make more money if the prices go down. Of course, it's a 50-50 type of scenario right now, and you know, you just never know. And I'm not just that comfortable with having a risk of the prices dropping down or experiencing another massive correction like we experienced a few weeks ago, or rather a few months ago. So that's just my thinking, and that's just my strategy. So obviously decentralized finance sort of brought in a bubble, and obviously right now this mini bubble has obviously popped, and things are beginning to stabilize a little bit. Moreover, a lot of these decentralized finance projects haven't really been tested. A lot of them haven't really been tried, if I can put it that way, especially in terms of hacking, because they might end up getting hacked. So it is also one of those risks that you have to consider when you are going to be playing the decentralized finance type of game. So that's all I had for you today. Please let me know, what is your strategy right now? And if we take a look at the daily, right, we are having similar sort of market indicators or signs, especially during the past few days. And some would argue, a lot of people would say, most likely point this out to be like a like a bearish flag, right? If that were a bearish flag, then this would obviously be the flagpole. And if we take a look at the target of this one, right, I mean, approximating that's obviously taking us to about 8,200, and that's like pretty a long way from here. If that was like a bearish market, I mean, that's pretty crazy. And this is obviously coinciding to the particular low. I mean, not really. It's coinciding with this particular low right over here. So I don't know. Well, we just have to see what's going to happen. So yeah, I was trying to say that the current signs that we are having in the market right now, we are having like very large selling pressure, and we are sort of constricting, and the volatility is coming to an end with regards to this downward spiral that we had over here. And if we go back to March, right, when we experienced this drastic drop, right, we had obviously about 3 to 4 days of just ranging in this tight little space, and then we had to like sort of complete this sort of bearish flag, and then everything, all hell broke loose. And due to the fact that there's a lot of volatility and stop losses get triggered, this is why we had like this massive daily candle right over there. And if we take a look at this, right, obviously the selling pressure was higher in comparison to the buying pressure, and this is what we are experiencing today and for the past few days. So I am super edgy right now, and I'm just being very conservative and just being very safe in terms of taking a safer route. So that's just me. I mean, there's a lot of aggressive traders right there, I mean right now, who are obviously utilizing stop losses and these other preventative measures in terms of capital, preservation of capital. So I mean, you can easily do that, but I just do not want to have the stress of just wondering whether the price is going to continue falling and just what's going to happen to my portfolio in case I am wrong. So I'd rather just sit back and just let the markets do their thing. And whenever the markets are going to make a decisive move, then I'm probably going to make my other decisions. All right, now I'm just saving myself a ton of headache. So please let me know in the comment section below, what is your strategy? What are you doing? And is it really wise for somebody to be buying right over here? Of course, dollar cost averaging is really a best strategy, but hey, what if you can dollar cost average when the price does something like this, when it makes its final drop down? You can start dollar cost averaging right over here. I think that is obviously like a better way to do it. So please let me know in the comment section below, what would you do? What are you doing? And yeah, talk to you a little bit later. It's been your boy Muna, aka Beyond 10x. Do not forget to subscribe, hit the like button, drop all your comments and contributions in the comment section below. Have a great day and take care.